A stock market is essentially a marketplace where shares of publicly traded companies are bought and sold. Think of it like a giant auction where people come together to trade ownership in businesses. It exists to help companies raise money to grow and expand, while giving investors a chance to own a piece of those companies and potentially earn a profit. The history of stock exchanges dates back to the 1600s, with the Amsterdam Stock Exchange being the first formal stock market. Over the centuries, stock exchanges have evolved, with major players like the New York Stock Exchange and NASDAQ becoming household names. These platforms have transformed how businesses raise capital and how investors engage with the market. When a company wants to raise money, it can sell shares to the public through a process called an initial public offering, or IPO. This means they're offering a portion of their ownership in exchange for cash, which they can use to fund new projects, pay off debts, or expand operations. Once shares are available, investors can buy and sell them through brokers or trading platforms. Brokers act as intermediaries, helping investors navigate the market. Trading platforms like Robinhood or E-Trade allow individuals to buy and sell stocks directly from their computers or smartphones, making investing more accessible than ever. Stock prices are influenced by various factors, including supply and demand. If more people want to buy a stock than sell it, the price goes up. Conversely, if more people want to sell than buy, the price drops. News events, economic indicators, and even social media trends can sway investor sentiment, impacting stock prices. Let's break down some common terms. An IPO is when a company first sells shares to the public. Dividends are payments made to shareholders from a company's profits. Market cap refers to the total value of a company's shares, calculated by multiplying the stock price by the number of outstanding shares. A bull market is when prices are rising, while a bear market is when they're falling. Investing in stocks comes with both risks and rewards. The potential for high returns is enticing, but stock prices can be volatile. It's essential to do your research and understand that while you can make money, you can also lose it. There are many myths about the stock market. One common misconception is that you need a lot of money to start investing. In reality, many platforms allow you to start with just a few dollars. Another myth is that you need to be an expert to invest. With the right resources and a willingness to learn, anyone can get started. For beginners, here are some tips to invest safely. Start by educating yourself about the basics of investing. Consider diversifying your portfolio to spread out risk. Don't invest money you can't afford to lose, and always have a long-term perspective. Remember, investing is not about timing the market, but about time in the market. By understanding how stock markets work, you can make informed decisions and take your first steps toward investing with confidence.